In this video, we're going to talk about the chart pattern of the ascending or rising wedge. Stay tuned. Hey traders, a very warm welcome to you. So, okay, we're talking about this kind of really interesting ascending wedge chart pattern. And I say interesting because for me, these aren't clear cut. I'm going to explain the textbook way of it, and I'm going to explain what I think is the best way of trading these as well. So stay tuned for the whole of the video, guys. Okay, ascending wedge, what is it all about? Let's look at the characteristics of it. First of all, let's just clarify, we can use these on a day trading chart, 1 minute, 5 minute, 3 minute, whatever we're using for a kind of multi-hour hold or multi-minute hold. You know, a little bit cautious about them maybe on a 1 minute if we're being that aggressive with it. Because it can be, they're a little bit noisy, a little bit grubby, a bit dirty pattern, not as clean as some of the others. But, you know, if you're on a daily, maybe 4 hourly, I think you're good to go on these. I think these are good because they're going to take some time to play out. And there's some other things we have to take into consideration before trading them. But, you know, we can look out for them and potentially use them to swing the weight of the trade in our favor. All right, so what are the characteristics, first of all, of this wedge? So the idea of the wedge is that we have an ascending wedge is that we have a kind of bullish characteristic to it. So we have an uptrend, but the important characteristic of the ascending wedge, as opposed to say a channel, is that we have a more aggressive slope. So the angle of this slope here, the lower slope, is far steeper than, if you can imagine, you know, it's far steeper than this. So what does that actually mean? It's all very well saying that, saying, oh yeah, it's steeper, that's great. What does it mean? What does it actually mean in terms of supply demand? Well, what's basically happening here is that the buyers are becoming less aggressive at the highs because you're not getting the same steepness of curve. In other words, you know, as price breaks through the prior high, it's not getting as much momentum to make a fresh steeper high. You know, if it was a steeper high up here, then you'd have that steeper trend line that would, you know, more like a channel. But because they're not that aggressive, they're running out of steam, they're running out of puff, they don't consider, for whatever reason, that that's value, they're backing off at that point. Or if you flip on its head, like I always like to do with supply demand, you know, sellers consider that they should step in earlier than they would than buyers are stepping in here. So if you flip it around on its head, they're stepping earlier and thinking, you know what, I want to get this now, I don't want to wait. And if you think about it, in the mind of a seller, all they want is the best possible price. There's got to be a real reason for them to step in front of that. So you have this kind of point. Unlike a triangle where you get to a point as such, this is just a general kind of look. Now these are quite tricky to spot on charts sometimes, guys, because there's a lot of noise, and if you're looking on a daily chart, you know, you're going to see movements all around, but it's kind of an overall feel of where price is going. It's that overall point of, hey, you know what, buyers aren't really as aggressive as we are thinking. You know, buyers are running out of puff a little bit here. You know, what's going to happen? And the textbooks tell us that, you know, an ascending wedge is potentially a reversal pattern. So if we see, you know, price has moved up in the uptrend, and then we kind of see this pattern, textbooks tell us that we should be looking for this kind of move. Okay. Now, you know, I understand what they're coming from with textbooks, guys, and you've got to say, listen, for me, there's no right or wrong in trading. You can look at something and if you interpret it differently and it works for you and makes money, that's the name of the game. We're here to make money, guys. So, you know, you and I may disagree on stuff. Textbooks and me may disagree. You and the textbook may disagree. We can all make money at the end of the day. So let me just say what I mean to say here is that, okay, textbooks tell us that this is a kind of reversal pattern, and it makes sense, doesn't it? It makes sense in that supply demand shift. And basically the textbooks will say to us, okay, you know, you really want to be selling a break here, or they may say to us, you know what, if you have this kind of a decent level of support, and we push lower, let's get rid of that, and you pull back to there and roll over, then you can nail it there. And I think that's pretty feasible. I think that's okay to do because you've quantified your risk a little bit. I'm not so sure about chasing the low here. I'd be cautious that this was just a bit of noise and we'd perhaps do another one or another two. I'd want to see a little bit more, which is why I want to see this first before I took it. But on the flip side of that, you know, if you look at, I think, you know, my take on patterns is, where do they appear? You know, that to me is the most important thing. You know, if you had this in an uptrend, I'd be very cautious about you know, I just wouldn't sell a break of that. Even though textbooks are telling us that's a reversal pattern, you know, I get it, I understand it. I just wouldn't do it because I've got the weight behind me. I'd be very nervous about doing that, and I'd want to wait and see, which is why I'd want to wait for a drive lower first, some good volume, not volatility, pushing back up to a kind of decent level that maybe has cemented itself from before, and then having to go on the short side because I'm quantifying my risk. Someone else has kind of proved its worth first. I'm not chasing it either. I'm waiting for it to come to me. So there's a couple of things that have lined up for me to take that, and that makes more sense to me. However, you know, listen, if we had this in a downtrend, right, and we've got a kind of multi or year downtrend and we're pushing up in this ascending wedge, then it's a different story. You know, we have this over say a month period or whatever it may be, and then it kind of breaks down through here. That's different. I like that because I've got somewhere to work off. I can see that, you know, the wind's behind it. I can see maybe this was just a bit of digestion. Now we're back in business. You know, I've got some levels that I can target that make sense because I've got the broad weight behind me. You know, I might be more tempted to go in on a break. The textbook's telling us I might be more tempted to do that than wait for a secondary play that comes off that. So anyway, a couple of ways to trade them, these ascending wedges, but you know, the theory of this, you know, makes sense, doesn't it, with a supply demand shift, but the kind of the pattern that we have, and perhaps that one's not quite as good, maybe it needs to be a little bit shallower, but you get the idea. The pattern, this angle here is much steeper than this angle here, which is kind of giving us a clue that potentially there's going to be a reversal from there. Anyway guys, if you like the video, don't forget to give it a thumbs up, and if you haven't subscribed to the channel already, please consider doing so for more videos from me and other traders on this channel. Comments are always welcome as well, by the way. Take care guys, good trading, see you soon, bye bye.